looking at key metrics is important, and it really depends on what type of business you have. There are some key metrics like understanding what your net profit margin is, understanding your revenue growth metrics. That's going to be relevant for any type of business, but depending on your industry, there may be other metrics that come into play that make sense. So if you're an e-commerce business, you would want to know what your gross profit margin is, meaning what your profit is after you've paid the direct costs associated with your items that you're selling. Other metrics we may want to know are things like AR turnover. If we're invoicing a lot of things out, and we want to know how fast we're getting paid on our invoices, that AR turnover metric would be a really good one there. We want to know some of kind of our cash flow type metrics to understand, are we bringing cash appropriately? Are there any issues there in the future that we may be running into based on our cash flow? Things like looking at our quick ratio tells us, do we have enough cash on hand or current assets on hand to meet our current liabilities that we have? So those are some good ratios we want to look at. As far as looking at particular reports, you definitely want to look at your profit and loss statement because that's going to give you key details on the profitability of your business. But you also want to look at your statement, your balance sheet statement and statement of cash flows to see how we're actually doing from a cash flow perspective, because those will help us maybe bring up some issues or pain points ahead of time that we can proactively deal with. And then as far as there's other metrics to look at are kind of your non-financial type metrics. So maybe it's how fast you're bringing customers in, what your churn rate is on your customers, things like that to help you understand, how profitable of a sales process you have, and then what you can expect for future profits going forward.
The best reports to look at when identifying the next big step and planning for business is, I would say, looking at a list of all of your expenses by account, and what I mean by account is by contact. So if you can start to see which contacts you're spending the most money with, it gives you a better sense of where your money is going, not only where your money is going, but to what your money is going to, so that once you've identified those key and major players that either help you create your product or service and or help you build the business in some way, shape, or form, you can start to plan and create budgets around what you're spending with those accounts and contacts. Another great report to really look at is a profit and loss. And it gives you a bit of a higher level detail around what you could have made over the last, series of months. And I always like to look at it where it's broken out month by month so that you can see over a certain period of time, maybe how much you've made, understanding where your seasonality is, because every single business does have some level of seasonality. Understanding, maybe some months are stronger than others. And then also the same thing can be said for the expenses listed within the income statement or the profit and loss, and just seeing, under which categories your money is being spent with and on. Most importantly, what's detrimental to the business? Is it some of the operating costs, or is it some of the direct costs? And getting a better sense of how that impacts your overall profit margin. So once you have these numbers in hand, then you can start to just better figure out how you can maybe potentially increase your profit margins over time by optimizing and saving on certain expenses that are going out, and finding ways to maybe increase pricing for yourself. Sort of a combination of all of those things, but looking at a profit and loss statement really does give a good sense of what that looks like in combination with an expense report by contact name. You need to identify who your ideal client is, not just from a psychographic standpoint, but as well as just a numbers standpoint. And what I mean by numbers standpoint is it might not necessarily always equate to the highest paying client or the biggest job, as much as it also gives you some level of personal satisfaction in doing the work that you do. But then secondly, it's not without its genuine challenges. All client work is always going to be difficult at some point in time, but certain clients, ideal clients, will respect your time and effort. So that being said, it's kind of a careful dance of being able to create boundaries, healthy boundaries with clients, so that they know to respect your time and efforts. But then also, at the end of the day, they're also paying you. These folks are paying you a dollar amount that is actually worth and reflective of your time. And it might not, again, necessarily be the highest paying clients, and it might not necessarily be the lowest paying clients. But first and foremost, identifying the traits of what your ideal client is. Secondly, identifying what your most ideal working scenario is, your ideal working flow is. And third, going through the list of clients that fall into both of those previous buckets starts to help you narrow down what the picture of your ideal client looks like. And this will probably change over time as well, because business as we know it is changing every day. And so expect this to continually shift, but always, I think most importantly, be very clear on who and what your ideal client and working flow looks like. And that, I think, will ultimately give you longer and more sustainable success along the way.
So the first thing I think you want to do when working with an accountant is making sure they have a full understanding of how your business is operating and functioning. They can give you really good insight and feedback onto your business because they're seeing that in other businesses as well. So they have a really great viewpoint on how a lot of different businesses are working, particularly within similar industries, and that can give you really good feedback as to what you maybe need to change in your business. One thing you want to do when you work with an accountant is making sure we're staying on top of the general bookkeeping activity. So making sure that all the accounting records are being updated appropriately and on a regular basis. By doing that, we get the data and information we need to make those proactive decisions going forward. And without that information, then it becomes really hard to manage the business in a sustainable way. Another thing we want to make sure is that we have a complete set of information. So doing things like bank reconciliations or balance sheet reconciliations, ensure that our information is accurate and that it's complete with everything that we need. And then we want to make sure and look at kind of our trends that we have in our business. So maybe it's how we spend our money or different kind of expense trends or revenue trends that we have, and see if there are things that we can adjust or change now that will help us in the future. And then I think you want to doing this really on a regular basis. So, really on a monthly basis makes the most sense as to making sure everything's in place, checking in with your accountant to make sure, we have everything, see what the numbers are saying and telling us, and see what we need to do and change in the future to have a better business.
To be more proactive in working with your finances, I think it first starts with identifying how you work with your finances personally. And everybody is different. There is no cookie cutter way of working how one person should be working with their finances, because ultimately every single person is different. And we have different experiences that lead us to the point that we're at now. So what I like to tell everyone is to first start by identifying, are you a hands-on person or are you a hands-off person? Because by putting yourself into one or either of those buckets, or maybe you're somewhere in the middle, then you can start to better understand how you're going to work best with your finances, right? I could dish out all day, every day, all the different tools that we could be using, but it doesn't necessarily mean that those are the best tools for you. So it's first we identify how we work best with money. Are you hands-on? Or are you hands-off? Are you hands-on in the sense that you really want to be in the weeds and you want to be looking at it ever so often? Or does it give you so much anxiety that you need to work with somebody to help you kind of break those barriers and get through those most immediate challenges, so that you can start working more proactively? And maybe that looks like working with a financial coach, or maybe a bookkeeper, or an accountant, and that really could vary. Or maybe it's working with all of those people. But how in the weeds do you really want to be? And once you figure that out, then you can start to figure out, well, I need these people resources: an accountant, a financial planner, a bookkeeper, or just a financial coach or advisor. Or maybe it's, I need these tools because these are the tools that I feel like are most amenable to me. And I think it's also important to note that when working with tools, that you're not going to figure that out right away. You're going to run through a series of tools that might work a little bit, some better than others, but it's ultimately thinking of it like Rome was literally not built in a day. And so finding your ideal combination of people and tools that set you up for the most success is going to take time, and that's okay. It's okay because along the way, we're all going to experience bumps and frustrations, and all of that to say not to give up, to keep on trying, because once you identify what those tools and people and resources are to help you, whatever that perfect combination is, it really does get easier, and it can become as easy as the back of your hand, or going out to the gym if that's a thing, drinking a glass of water, eating a meal. I mean, it really can be that easy, but it really will take some time and genuine effort behind building those habits and discovering those resources that work best for you. Once you've hired your first employee, you want to make sure that you have workers' comp insurance and that you are instituting payroll through a reliable payroll provider to make sure that the necessary state and federal taxes are being taken out so that ultimately you don't owe any sort of fines. And then in lieu of having workers' comp insurance, different states have so many different guidelines. So it's important to make sure that based on the way in which this employee is working for you, that you are covered in that sense in whatever ways that you need to be, as dictated by your state, because if not, then you face potentially having to pay penalties later down the line, which from what I understand can be pretty hefty depending on the state you're located in. So it's best to just try to get everything as set up as possible ahead of time. The third thing I would say is, and prior to bringing on any sort of employee, is to really do your homework and understand what are the state guidelines for bringing on an employee, because as I said before, every single state is wildly different from the next. And so you just want to make sure that everything that you're doing and the way that your business is set up is completely in compliance with the mandates from state and federal requirements.
We want to make sure that we're doing everything from an HR standpoint that is basically kind of best practices. So making sure that we give them an employee handbook with kind of our policies and procedures and how we operate in the business. And if you have a really small business, you still probably want to do this because this is important to kind of document and dictate, what you're kind of expecting from this person and the different policies you have in place that you want them to abide by. And then making sure that they're going to get set up and kind of getting bought into your culture on a going forward basis. So, making sure that the person that you hire is the right culture fit, first off, but then making sure that they're really got to ingrain into your business, because you don't have the right person in your business or the right employee fit, that can create long-term problems. And so you want to make sure we and then make maybe a change, or maybe decide this person isn't a great fit and find someone else for that role. But making sure that we really have that person kind of locked into what we're doing. And we'll also make sure we're doing all the compliance things that we need to, whether it's I-9 forms, or making sure, depending on the size of our business, that they're getting the appropriate benefits that they're supposed to. Ensures that not only we're in compliance, but then we're providing a good work environment for our employees as well.